How's it going, guys? I hope you've all had an excellent week. I wanted to get this breaking news out to you. Update from the Federal Reserve, today's announcement. They increased the Fed funds rate, so the interest rate that trickles down into credit cards, into mortgage payments, into auto loans. They increased that by 0.75%, currently sitting at 3.25%, with the goal of getting it to 4.6% by 2023. So the Federal Reserve is aggressive in attacking this inflation, and they want to get the interest rate up to 4.6% by 2023. They noted that they are attentive to the inflation risks and they're going to continue being aggressive. Now, obviously the markets didn't like this today. The Dow Jones crypto stocks were tanking. They did not like this aggressiveness coming from the Fed. They also said that the Fed funds rate, they plan to increase it to 3.9% in 24, and then decrease it by 3.9 to 3.9% in 24, and then 2.9% in 2025. So from the next 1 to 2 years, we're going to be seeing these increases in interest and then slowly start seeing them come back down. They did predict an increase in the unemployment rate from 3.8% in 2023 to 4.4% in 2024, and then coming down a little bit to 4.3% in 2025. So usually what follows an increase in unemployment rate is a recession. So Powell did concede that a recession is possible if they continue being aggressive by raising these interest rates quickly. Considering the growth of the economy, this year's GDP is only going to grow 0.2%, so very slightly growth of this year. And then in 2023, 1.2%. 24, 1.7, and 2025 a GDP growth of 1.8%. So the Fed's continuing to be aggressive. Now, how does increasing the Fed funds rate affect you? Well, this trickles down into our everyday spending. So if you look at credit cards, you look at mortgages, even auto loans, if you don't have a fixed rate, these rates are going to go up with this increase in the Fed funds rate. And the whole purpose of increasing these interest rates is so that the consumer will spend less and save more. Now, if you look at these type of bear markets now, millionaires are made during bear markets. And that's why I press the fact that you always need to be looking for opportunities to increase your income, whether it be your job that you find. If you find a job that you can grow in, or your side business, look to do that. Now, if you are in a situation where increasing your income is not that easy to do, then I always recommend adding to your personal value. If the unemployment rate is going to be going up over the next 2 years, it's always good to have an extra skill set in your back pocket so that you are an advantage and you are an asset to a company if it ever comes up that they are looking to lay people off. But during these downturns, millionaires are made in bear markets. They are not made in bull markets. And even if it's $50, $100 a month, taking that little bit of extra money, putting them into solid assets that you have researched, that you believe in, and just taking advantage of these down days, because as we look in 2025, the Fed is predicting that the interest rates will be back down to 2.9%. So when the interest rates go down, people are going to be looking to start spending more, a lot more money coming into the market, and it just has a turn of an economic cycle. So guys, with that being said, that's the update for today's video. Just want to get you those latest numbers. Keep your head in the game, look after each other, keep adding to your personal assets and your personal value. I'll come out with a new video every Friday, and then also when these market updates hit, I like to drop a new video. So keep investing, keep your head in the game. I'll catch you guys on the next video. Take care. Cheers.